Today is Monday, February the 10th, and you can see that advancers led decliners by almost 2 to 1, not quite. Volume, lower than we've seen, but in line with what we've seen since Thursday. So that's 3 days in a row now where we've had below average volume compared to above average volume that we saw for the 2 weeks prior to that. But the coronavirus fears that were talked about pre-market, as soon as the market opened, they just disappeared. And in the first hour and a half of trading, the market went up and then just sort of plateaued and finished off strongly to finish the day. NASDAQ, the same, S&P 500. So the advancers and decliners on the New York Stock Exchange, the advancing vol was about this. Well, advancers led decliners 1,700 to 1,200. The volume was pretty darn close between the two, so that takes our breadth indicator back up towards the neutral line. And tomorrow it's quite possible that we have another up day and that we just bring ourselves back to neutral. But look at the last time this happened. We moved above that and then we came down and we went deeply into the oversold area. Same thing happened here. Same thing happened here and here. So when you get these lower highs of money moving into the market, like we saw here, 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 those are followed by a lot of money moving out of the market. And that could be what we see, and that could be accelerated when the coronavirus scare actually is serious enough that people don't buy the dip. And that's what's happened now. People are buying the dip. That can get old, and that's what we could be heading into. So the S&P set a new record. You can see that the day just went from good to better. So the cup and handle that we're looking for still is intact. Cup, handle. Let's wait and see if we can get a decent run on the handle, and then we could be moving higher, but I'm still hoping that we do make contact with the cloud, and if we bounce off of that, then we really should be piling into the market. Apple was down about $3 at one point, maybe $4, and finished up very strong and closed at its highest price of the day. That's where it closed. So it's going to be testing that 323 again, and let's see how many times it takes to test 323 before it breaks through. The coronavirus is hurting Chinese sales and eventually could hurt Chinese production, so keep that in mind. But it's still not a stock to sell. I still have the shares. They're going to deliver their dividend this week, and I still have my shares covered by this week's 320 calls. Caterpillar up 88 cents, pretty low volume. They say that their Chinese workers are going back to work either today or Wednesday. That doesn't mean they'll stay there, and I hope they're not putting their workers at risk. Shopify, I have to tell you that I got rid of Shopify today, the 6 contracts that I had, because I thought we were heading for a down day. Wrong. Shopify ended up $13, or up almost 3%, but I did make a couple of $100 profit on the 6 contracts, nowhere near what I was hoping to do. We're getting up to that $496, $500, and we're coming up to the earnings on Wednesday. So I just as well be out of any trade before earnings. So I'm not disappointed that I got out. At least kept a little bit of profit. AT&T closed over $39. I like to see that. WDC up $1, Whirlpool only up 20 cents, really stuck in the cloud. Amazon had the big day, almost up 3%. This is really what drove the NASDAQ up $56. Look at that breakaway candle. This is really something. It's a powerful stock, and it's a stock to look at for a vertical spread. Once we're happy that the market is heading in our direction, we are still looking at the cup and handle, still trying to confirm that it can stay and continue to make new highs. Tomorrow will be an important day if we can have another high after these 3-4 days that match the previous high. Zach posted a comment today that he saw a Fibonacci in the 10-day, 60-minute. I don't know if this is the Fibonacci he saw, but if you take this wave and take it off of this point, then we did hit 100%, and now we've hit another important Fibonacci area of 127.2%. And it's churning there. So let's see if it can break that. I don't trade Microsoft. Both of the SMIs are showing that it's overbought. I'd like to see what kind of Fibonacci's he's looking at. I'll play with this a little bit more tomorrow. I'd also like to look at, let's do a Fibonacci. Let's do a Fibonacci, that's an extension. Let's do a Fibonacci retracement between here and here. And this pullback here was almost, well, if we take our Fibonacci, if we'd taken our Fibonacci and we'd drawn it down here, then we would have had a pullback to 61.8%. So this is a good wave to be looking at because it did have a 61.8% pullback, and now it's had an A, B, C, D being equal. So that's a pretty interesting observation by Zach there. Let's keep an eye on that. And for those who trade Microsoft, let's see if the Fibonacci's can give us a heads up into what's coming. Right now, the next Fibonacci should be 138.2%. And let me see if I can see where that is. It's not drawn here. I'll draw it and we'll have a look at it tomorrow.